You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Solana, Doge, and more. Cryptocurrencies and digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity, provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments throughout the world's leading crypto derivatives markets. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. Now it's time to dive into the exploding world of crypto derivatives. It's time for the Crypto Rundown.
All right, everybody. That music means we are back once again. It is Monday, time for a little bit of the old Crypto Rundown. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which so many of you have been binging on of late. If you're just listening to the Crypto Rundown, man, you're missing out. Nearly a dozen other shows, including some fun special events like tomorrow, big day here in the U.S. Election Day, listeners. So we will be going live tomorrow night starting at 6 p.m. Central. I will be joined by a bevy, a slew, a plethora of special guests for, let's say, 3 hours, whenever the spirit compels us to finally end. Whenever my voice gives out is probably a more accurate comparison. But I will be joined by a slew of special guests to break down everything going on in the markets. The crypto angle obviously going to play a role in that tomorrow as well. We're seeing a lot of movement heading into the election as a result of the ebbs and flows of the various candidates and their stances, pro or maybe not as pro crypto out there. So there's going to be a lot to talk about on our election night special. Make sure you tune in for it. We'll put out all the links and everything ahead of time so you can join us live. If you can't make it for the full thing or you can't make it at all, of course, we'll have it available on demand as well. Should be a fun time. Join us if you can. And who's joining us on the old program today? Well, we've got a first-timer joining us, so it's time to roll out the Crypto Hot Seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody. Welcome to the Crypto Hot Seat, the portion of the show where we welcome on guests from throughout the world of crypto derivatives and indeed beyond, and proceed to pick their brains for the benefit of you, the listener. And next up on the program, as I said, he's a newcomer to the program and indeed to the network. He is Evgeny Lyandres, the founder and CEO of VirtuSwap. Evgeny, welcome to the Crypto Rundown program.
Thank you very much. It's great to be here.
Did I get that right or did I butcher it? How did I do?
No, you did great. I mean, better than 95%.
All right. Well, there you go. I will take that. All right. Evgeny, as we are wont to do with all of our first timers here on the network, why don't you go ahead and give our audience a bit of an overview of your background in the world of finance and crypto, as well as what it is you guys do over there at VirtuSwap.
Sure. It's my pleasure to do it. So I'll usually say that I wear two hats. So I've been a finance professor for about 20 years now. Most of my time I was at university, and about 4 years ago I went back home to Israel. I'm now a finance professor and the head of blockchain research center at Tel Aviv University in Israel. And about 3 years ago I founded VirtuSwap that you mentioned, which a DEX exchange that's more efficient than others. We have a special trading technology. The idea basically is to make trading on decentralized exchanges cheaper, more efficient, especially in longer tail assets. And when I mean longer tail assets, is basically everything outside of top 5-6 assets on every chain. It happens so that about 25-30% of trades involve assets like this, right? So you think of big ones such as Chainlink or Matic and Polygon, but still outside of top 5. Usually, those trades on traditional DEXs involve what's called triangle trading, and that means that in order, for example, to exchange, Chainlink against, USDC. Typically, there's not going to be a pool like this, so you'd have to go through an intermediary pool, and by doing so, you'd have to pay all the costs twice, right? The pool fees, the price impact, the gas fees, and our technology, which I'll be happy to talk about more, basically allows to eliminate this double expense or double cost component, right, and basically makes trade cheaper by a factor of almost 2.
Interesting. So you went back home,
what we're doing
started dipping your toes in the crypto space, realized, for the smaller assets outside of your Bitcoins and the ETHs of the world, you thought maybe a little bit hard to trade, maybe a little bit pricey, and thus VirtuSwap was born. So you mentioned some of the assets you can trade on there. I guess you said anything out of the top 5. You've been around since, I believe, 2021. So it's been a few years now. You launched at certainly an interesting time to launch a crypto venue, 2021, a hot time in the world of crypto and in the world of finance. We're 3 years in here, Evgeny. How has the volume been over there on VirtuSwap?
Right. So, well, as you know, the whole market has gone through some turbulent times, during those 3 years. And in fact, the amount of activity on DEXs is lower now than it used to be 3 years ago when we launched, right? Which is a little bit disappointing, right? For the market as a whole. We can talk about the reasons, for it, and I think some of the reasons relate to the introduction to this episode. You're right. You were talking about the elections, right? And what is important is regulation, right? And so the upcoming regulation in the next 2 years, I think, is what's going to define this market. So the volumes, you asked about the volumes on VirtuSwap, they're not very high. The reason is that in this market, it's still pretty difficult to attract liquidity. We are getting more dollars of trade per unit of liquidity than most of our competitors. But the absolute volume is still growing, right? This is still something that we strive to increase. But the efficiency is there, right? So every dollar of liquidity that you put in VirtuSwap is going to generate more trades than on other DEXs, and the reason is that as many other DEXs, we are kind of integrated with aggregators that are trying to split trades into the most efficient routes, right? And our route is more efficient than most, again, per dollar of trade, right? So that's the picture right now.
We've had a lot of DEXs on the show over the last 4 years in particular, I would say. So it's a very crowded space. Do you think that has something to do with the issues attracting volume? You said volume is down pretty much across the board on a lot of these DEXs right now. You think some of that has to do with just the fragmentation? It seems like every week on the show, we're getting hit up by yet another DEX at a certain point. You're spreading that volume pretty thin, aren't you?
That is definitely true. So I mentioned aggregators. So aggregators is one way to aggregate the fragmented liquidity, right? And even though there are a lot of DEXs and even more pools, right, some part of the trade is going to go to the relevant pool, regardless of how small that is, right? So that is fine. What worries me more in recent times actually is the fragmentation of liquidity across chains, right? So there is pretty much every day that a new chain is born, and kind of aggregating liquidity across chain is a much trickier proposition. And right now, so far it has not really been solved, right? And so this liquidity fragmentation across chain does really make kind of liquidity pretty low on most chains. And when you also add to that, the multitude of DEXs, on different chains, that indeed spreads the liquidity thin. So that's an issue that that needs to be solved. I don't think that we are sort of at an equilibrium right now. I think we're just kind of trying to find what the eventual equilibrium is going to be. I think it is going to involve fewer DEXs and definitely fewer chains.
You mentioned that kind of cross-chain liquidity. You're right, that is an issue. Is that, you think at the end of the day, is that a technology problem that will solve that? Or you think it's these aggregators need to just do a better job of, maybe someone wants to do Tron versus ETH, and they're able to get those two together? How do we cross those chains there, Evgeny? How do we cross that bridge?
Right. So, I mean, this is not something that we are doing, but there are technology solutions that are emerging, such as, EigenLayer and, things of this nature that tries to connect different chains. But eventually, I think the market is going to decide, which chains it needs and which, it doesn't. And eventually, the chains that are not needed are going to be washed out of the market just by virtue of competition. But that, as with any other market, is going to take time, right? So right now, we're sort of in the it seems like we're in the market discovery stage. So it's probably going to take, 1, 2, 3 years, 4 years to figure out, how the equilibrium is going to look like.
Well, you mentioned one of the impediments to volume right now, certainly very much looming in front of us, is the U.S. election. I think to say the regulatory scene here in the U.S. is opaque, is put it mildly, out there. I've heard a lot of complaints over the years from people in the crypto space about just how difficult it is to do business here in the U.S., which is why so many of certainly the DEXs, but a lot of the guests on this program are all beaming in from other regulatory arenas around the globe and not in the U.S. It's become pretty clear that at least here in the U.S. election, one camp is at least trying to position themselves as much more crypto friendly than the other. Whether that's true, what comes to pass, who knows? They are politicians at the end of the day. But I'm curious from your perspective there, Evgeny, do you think that's gumming up the works, not just here domestically, but internationally, you over there in Israel? Is everyone waiting for the outcome of our election before they can really move forward with a lot of the projects they want to unfold in the crypto space?
Yeah, well, I cannot speak for everyone, of course, but it seems like it's really something that the whole world is eagerly anticipating. Or at least the whole crypto world. The reason is that if we take ourselves back to 2021, when a lot of new crypto projects were formed and funded, the valuation back then based on an assumption that this whole kind of decentralized finance technology is going to be useful to assets that are outside of crypto, right? So basically tokenized real world assets. That was the reason for the huge valuations of pretty much every kind of round of financing that we saw then. And that clearly didn't happen, right? And the reason for it is that there is no clear regulation, not in the US and frankly not anywhere else in the world. Until, this market or this technology could be made useful for the overall kind of financial markets outside of crypto, which 100 or a couple of hundred times bigger than the crypto market, right? Until then, I'm not sure that kind of crypto has much room to grow, right? Because until the big kind of players in finance are going to take it seriously, right? I don't think that we're going to see 10x valuations relative to what they are now, right? So, and for that, as I mentioned, regulation is crucial, right? So, if regulation is such that it would eventually allow tokenization of real world assets with their ability to be listed and traded on DEXs, right? And with all the benefits that decentralized finance provides, right? Then I think we might see an explosion of this whole sector.
Well, you're certainly working with a lot of the buzzwords over there at VirtuSwap. You've got, of course, DeFi, which is a hot buzzword still to this day. And also, you're using a lot of AI over there to help drive a lot of your systems behind the scenes. Now, some people will be intrigued by that. I know some of our listeners are also, those are two buzzwords that both terrify them. So putting them together probably going to terrify some people. But what are you folks doing over there at VirtuSwap with AI?
Sure. I'll try my best to put it as simply as possible. So we actually started working on what people now call AI agents some time ago, before the word became fashionable. And the idea is actually quite simple, right? So we have a trading technology that in many cases turns out to be more efficient than others, right? But at the end of the day, a success of any trading system is basically a function of the liquidity it has, right? So the more money the system has, the more efficient it is. And so what we have developed is basically an engine that we call Minerva, which tries to basically allocate liquidity to places where it's needed most, right? And what it does in very simple terms, it consists of two parts. The first one is a predictive model. So we basically take all the data of all the trades on all DEXs in the past period, for example, past week or month, and try to predict the distribution of trades over the next period, for example, the next week. All right. Now, of course, there's going to be some noise, right? We're not going to do this perfectly, but we're trying to do it as best we can. Now, having this prediction, right, of the distribution of trades, we are asking ourselves the question, right? Where would we like to see liquidity, right, in order to maximize some objective function, be it reduction in average trading costs or maximization of return to liquidity providers, or some combination of the two, right? Now, since, of course, ours is a completely kind of decentralized and distributed system, we can't really tell our liquidity providers where to put liquidity, but we can try to basically, to move liquidity to places where, where we want it, where we think it's going to bring the biggest, bang for the buck, by allocating our rewards to particular pools, right? So every week we are going to we are running our optimization, right? And basically says that 15% of our VRSW, our token reward this week is going to go to this pool because we expect this pool to be most useful in facilitating trades, right? And then 10% is going to go to another pool, and so forth. And so every week we're going to reallocate those rewards, such that to urge our liquidity providers to move liquidity to places where we think it's needed most, right? So basically, in a nutshell, what VirtuSwap does is kind of a combination of more efficient DeFi, and I haven't talked really about the trading technology, but it's based on a trading via what we call reserves, right? And that is something that allows us to eliminate the cost of triangle trading, right? So a combination of more efficient DeFi with this AI agent, which is kind of optimization of liquidity across pools, and the combination of those two things have synergies, which basically allow us to to get more trading for every dollar of liquidity.
It's fascinating, Evgeny, and I appreciate you taking some time to join us here on the program. We have to keep rolling with our show, but before we go, we like to leave them wanting more, Evgeny. So you touched on your use case for AI over there. What else can people look forward to? Give us some hints, give us some teases of what our listeners can look forward to coming down the pike in the coming months from VirtuSwap.
Of course. So we're working on several exciting things. The first one that's probably going to come first is, we talked about kind of the multitude of chains, right, and the fact that there are probably going to be fewer chains in the future. But for now, it is important to expand to chains that we think that are promising. Right now, we are active on Arbitrum and on Polygon. And soon we are going to be expanding to an up-and-coming chain that I'm personally very excited about. That's called ZenChain. It is done by people who founded Unison, which is one of the, if not the most efficient DEX aggregators. So, I'm personally very much looking forward to this chain, and for us being the premier DEX there. So that's going to happen in the next few months. In addition, we are working on several more more advanced AI agents that are centered at basically sort of vaults, right? And the idea basically is that people would be able to deposit liquidity in pretty much any coin, any crypto. We are going to exchange this crypto into something that we think is going to be the most efficient in our system, right? And then eventually, the person is going to take the money out. He'll be able, obviously, to exchange it back to the currency he started with. But the point is that you don't really need to think about, market timing or pool picking. The system, the AI agent we're currently working on is going to do it for you. This is, more longer term kind of prospect, but this is something that we're excited about and, something that we're going to be rolling out in 2025, hopefully.
So if someone comes to VirtuSwap in the future and they deposit assets in, let's say, Polygon, your AI would maybe swap it to Tron because it's more efficient? When they want to cash it out, they would get Polygon again? Is that how that would work?
Exactly. And we're going to constantly update the liquidity, right, with the goal of trying to maximize kind of the returns to it, for the time that the liquidity is there on VirtuSwap.
That have to be a short-term transaction, though, because if you have it long-term, they're going to want the return profile of whatever they deposited, right? And if, let's say, Polygon takes off and Tron sits around for a while, they may not be a happy customer at the end of the day.
Sure. No. So of course, hedging is going to be involved. It's a pretty sophisticated system with another agent type that's called hedgers, right? They basically take the risks, of course, willingly and for rewards, right? And basically offloading this risk, from the people who don't want it, right? But overall, right, like in pretty much any economic setting, right, the important thing is to grow the pie, right? And then dividing the pie is an easier undertaking, right? So the idea basically is to try to always kind of maximize rewards or returns to liquidity at any given point in time, right? And then redistribute, the gains, between people who provided the liquidity in a fair and profitable way.
I think we can all agree on that. Growing the pie is better for everyone. And Evgeny, if folks want to grow their knowledge of what you folks are doing over there at VirtuSwap, where should they go? What should they do?
So the first place is probably our website. It's virtuswap.io. It also has a link, obviously, to our trading app, but also to a bunch of places where we publish information about VirtuSwap. We have, obviously, Twitter or X. We have Medium, where we publish longer, kind of more detailed articles about what we do. We have, obviously, our Telegram and Discord, right? All of those places have quite lively communities and quite a lot of information that people can read and learn about us.
There you go, listeners. Check them out. VirtuSwap.io, the place to go. Meanwhile, we have to go right on into our next segment. It is time for the Bitcoin Breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, listeners, welcome to the Bitcoin Breakdown, the portion of the show where we do just that. We break down all the action in the world's leading digital asset. Yep, we're talking about the big dog BTC, a little bit smaller than our last show last week. Last week, crypto and Bitcoin in particular really had the bit, pun intended, in their teeth. They were on the rampage, on the upswing, a lot of optimism heading into the U.S. election that a more crypto-friendly regime will take office, and that was reflected in the price level. We hit 68,858 on the show last week, but that wasn't the high. The high actually came on Tuesday, where we hit 72,724 last week, so pretty frothy. And then the low came actually earlier this morning. Actually, right now, as we're kind of kicked off the show, we were back below 68,000, 67,901 to be precise. So down nearly 1,000 handles from where we were this time a week ago, about 957, and obviously much more than that from the high. So maybe some profit taking, maybe some folks dialing back their optimism heading into the election. It is crazy to me that anyone's celebrating on any side heading into the election right now. It's because it is still so close. It is still so uncertain. I think a lot of people were reacting to some of the action we saw on the prediction markets over the last couple of weeks, but we all know not a huge volume on those, so they can be manipulated, listeners. So just bear in mind, in fact, there was a quote-unquote French whale bidding up a lot of that on Polymarket. So just bear in mind what you're seeing out there in some of these marketplaces out there, listeners. If you want to see what we're looking at here, head on over to Amber Data, amberdata.io, the place to go to kick the tires and light the fires. If you did that, you'd see that vol looking a little spicy in the crypto space right now, which makes sense. There is a huge and potential inflection point, a huge event happening not even a week from now. It's happening tomorrow, listeners. At least we hope. I hope we have an outcome tomorrow night. We don't need one of these lingering, contested elections. That's not good for anybody. But right now, the weekly vol in Bitcoin is reflecting a huge potential inflection point tomorrow. We were at a 54.6 on the show last week, 80 coming into the start of the show right now. I haven't seen an 80 in Bitcoin vol in quite a while. So that's looking pretty spicy. Now, that's on, of course, the weekly vol front. You get to a little bit more normal vol metric, like 30-day vol. It's still looking spicy, but not quite as spicy. It was 55.7 on the show last week, 61.25 this week. So we haven't kissed a 60 handle in vol in Bitcoin 30-day in a while as well. So again, looking frothy, but that is to be expected. There's a lot going on in the next 24 to 48 hours. So should be interesting. Longer term vol, we know those are calmer, cooler, saner heads traditionally. 54.5 a week ago, 55.6 today. Let's get out to the Skew and see what the Skew is showing us. This is interesting. On the weekly Skew front, we're really not seeing a heck of a lot of anything. It was 2 3/4 to the upside on the show a week ago. Coming into the start of the show today, it is positive 0.75. So not even a positive 1. So I think we'd be seeing a bias in some direction really out there, but I think anything within 1 point in either direction to me is pretty much flat. So looks like the near dated Bitcoin options are kind of at an equilibrium heading into the election, which is kind of fascinating. I thought we maybe see a bias in one direction or the other. You go a little bit farther out, and that's pretty much the case as well. 30 days, positive 3.35 a week ago. This week, positive 2 3/4. So coming in a little bit. Not that some of that is because we're come off the highs, obviously, but also, I mean, it's a decent bias, but it's not explosive in any direction either, which is kind of interesting. Longer term, 180 days, positive 4 1/4 a week ago, 3 3/4 this week. So obviously, long-term Bitcoin bulls. They're bullish, obviously, so they're going to be biased to the upside. Coming in a little bit out there. What else is coming in? Coming in pretty hard are a lot of the Bitcoin assets we like to talk about here that a lot of you like to trade options on, like BITO. 18 1/4 right now, down $1.60 from where it was this time last week. Now, it did go ex-div, so that, of course, is something to bear in mind. The dividend in BITO is a lot, and whenever that comes out, it's going to come right out of the stock, listeners. So that was nearly $1 again this time. So if you've had BITO in your back pocket for the last few months, you at least collected a fair amount, probably almost $3, just in straight cash on that dividend. Now, you had some fluctuations on the returns, but the dividend is at least a decent thing to put in your back pocket. The ADV, 131,000 out there right now. That's interestingly enough. Actually, it's up a little bit. It's up to about 133. That puts it up about 2,000 from where it was this time a week ago. Paper-wise, this is where BITO is coming to shine, listeners. The ADV is 133, 304,000 contracts on the tape today. So obviously we just went ex-div, so that was part of it, but also just enormous paper. I'm looking here right now, listeners. Looks like we have the DEES 15 3/4, 13.15. These are funky strikes. Looks like a put spread going up 100,000 times. Yeah, that was a spread. That'd be interesting. If they bought that, listeners, obviously 2.65 point wide spread. They paid, looks like about 63 cents for it. Would you be a buyer or a seller of that spread for 63 cents, listener? That's another interesting one. Maybe that could be a fun flash poll we can put out ahead of our election fun a little bit later this week. But that's an interesting spread. Now, if past is prologue, I would think people might be selling that just because Bitcoin bulls are Bitcoin bulls. And in the past, selling puts in BITO has worked out pretty well. I'm trying to see if I can get more execution data on that for us, listeners. It says, yeah, exactly mid-market. So I'm going to guess people probably sold that, but the way it went up here, it looked like they might have bought it. But I think the way BitO has traded in the past, not a lot of downside put buyers in BitO. If you do want to buy those, they are fairly cheap. So that's something that's attractive, I suppose. I don't know, listeners, are you a buyer or a seller at that level? Again, might be a good question of the week or a good poll question for our audience. In terms of vol, the vol's getting spicy out there. It's at a 70 right now in the 30-day vol. So interesting stuff. Obviously, you take away that massive put spread, only 104,000 contracts on the tape in BitO today. So that put spread really distorting things a little bit out there. In terms of size positions, it's still the Jan 30s and Jan 35s with 110,000 and 80,000 contracts respectively. Let's get out to BitX. It's at a 31 even this week, so pretty much giving back everything it gained last week. It was up 265 last week, down 2 3/4 this week. So it giveth and it taketh away. Right now it's taken away. The ADV, 30,000 contracts a day. It's up about 3,000. And today we're seeing 30,000 contracts on the tape as well. So interesting. Decently heavy day. You'd expect some paper to be hitting in a name like BitX heading into the election. Looks like the big dog right now. 1,200 of the Nove 35 calls. I said we're at a 31, listeners, going up today. Looks like paper probably selling those. Yeah, they sold them for $1.85. Not a bad little covered call, getting nearly $2 in your pocket. And if BitX rallies, you're out at effectively, 35 plus $1.85, so $36.85. Not a bad do, as the kids say. If it sells off, then you have nearly $2 worth of cushion. I mean, you might still wear it on BitX because this thing could easily fall out of bed, but at least you have nearly $2 in your back pocket for a rainy day. So interesting stuff out here. In terms of size positions, it's still those Jan 2026, not even this coming Jan 2026 70 puts, still dominating the tape out there in BitX. I almost said Mara because we're coming down to Mara right now, listeners. Mara 15 3/4. Another one giving up to Ghost. This is kind of fascinating. I thought maybe these crypto assets, a lot of this bid we saw recently was based on optimism heading into the election. Either the worm has turned or people are just not as optimistic as a week ago. Either way, Mara giving up the Ghost here. 15 3/4 down $3.20 since our last show. The ADV continuing to get frosty, though. A 284 up 15,000 contracts from this time a week ago. Today, we have about 205,000 contracts on the tape. The vol staying spicy. It's at a 110. That's going to put it up about 4 points from where it was this time last week. In terms of size positioning out there, people playing for the election, as you would expect. It looks like the November expiring on the 8th. So this week, 17 half calls going up nearly 15,000 times. Those are opening. And the 17 calls going up as well, listeners. About 11,000 times. Oh, it looks like we might have had, it looks like we might have a 17, 18 half vertical. Looks like they did it for expiring this week they did it for 28 cents. The 17s for 50 cents on the bid. 22s also on the bid for 18 halves also on the bid for 22 cents. Could be a stupid. That would be very strange. I don't recommend that, listeners, getting naked short a bunch of units in Mara heading into a big inflection point tomorrow. But we have seen weirder things. It could be a bit of a roll down as well. It's definitely opening on the 17th, so that could be happening as well, in which case we have seen weirder things out here in Maryland. The big dog position out there, the Jan 30s, 42,000 of those bad boys. They're looking a little bit better last week than they are right now. Speaking of how things are looking, let's see how the altcoin universe is shaping up.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, listeners, let's get down to business in the altcoin universe. Let's kick things off. It cost you this week $12.18 billion to break into our top 10. That is down about 0.4 billion. We were at 12.63 this time a week ago, listeners. That got us to Toncoin last week. And what does it get us to this week? Oh, also to Toncoin. coming in at number 10, listeners. Number 9, it's Tron. So our bottom half of our top 10 shaping up pretty much exactly the same as last week, just at a lower valuation level. Number 9 is Tron, 14.1 billion. Number 8 is Doge, 23.2 billion. Number 7, it's XRP, because of course it is, 29 billion, pretty much flat. Number 6, USD Coin, 35 billion, also even there. Number 5, it's Solana, 75.25 billion. Number 4, it's BNB, 79.7 billion. Number 3, it's Tether, because you know it. You love it. Maybe you hate it. Either way, it's always number 3. It's Tether, 120.5 billion. Number 2, it's ETH, 292.7 billion. And the big dog, Bitcoin, 1.34 million. All right, let's get on out to number 2 in market cap. Number 1 in a lot of your hearts, it's ETH. Kind of treading water, at least net show to show. 24.98 on the show a week ago, 24.30 coming in today. So down about 68 handles, which in ETH is pretty much a rounding error. Got a little bit higher, hit 26.58 heading into Halloween last week. And the low is pretty much right as we kicked off our show today. So 228 handle range on the week, even if net were only down about 68. Vol-wise, though, as you might expect, things getting spicy. 7-day vol and 81. So obviously pricing in a massive inflection point tomorrow. That's up from a 51 this time a week ago. So whopping 30 points on the weekly vol front. That is spicy. Looking 30 days out, not quite as spicy, but still ticking up. Almost a 61 last week, 64 this week, so up a little over 3 points. And 180-day vol, 63.4 a week ago, 62.8. So actually coming in. They're hoping that whatever the hell happens tomorrow, we'll have calmer, cooler, saner heads prevailing going out 6 months. Skew-wise, kind of the same deal. Not a huge evolution, which to me is very surprising given what we have staring at us in about 24 hours. Let's go out to the 7-day skew first. Negative 2.5 on the show last week. Negative 2 this week, so no real change there. Monthly skew, negative 1.5 a week ago. Negative 1 today. And 180-day skew, positive 5.7 a week ago. 3.5 right now. So coming in quite a bit on the longer term front, which is kind of interesting. Well, let's run through the rest of the altcoin universe, and then we'll tackle some of your crypto questions, listeners. Let's go out to Solana first. 175 on the show last week. 175.07 to be precise. 159.45 this week. So that really dramatically lower tide just sucking down everything this week. Down $15.62 on the week. XRP, 51.4 cents. I said on the show last week, not going to be able to maintain that. And that's the case. 50.9 cents, down about half a penny. So no big deal out there. Dogecoin, actually the rear uptick. 15.2 cents last week, 15.9 cents this week. Litecoin, 69.83 last week, 66.17 this week, down 3.66. Cardano, 33.6 cents last week, 32.8 cents this week. So down a whopping 0.0075 if you want to get really precise, listeners. Polkadot, 406 last week, 378 this week, down 28 cents. And everybody's favorite, Shiba Inu, giving back the hubcap for the Lambo. It was $1,000,017.39 this week, 16.89. And before we roll out of here, listeners, let's tackle some of your crypto questions.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, listeners, a lot of people have questions heading into the election and the crypto scene. I get it. It makes sense. Let's squeeze a few of you on here. Let's go to Ralph. Ralph Humphrey says he has 2 questions. Well, you know what? We usually limit you to 1, Ralph, but we'll be nice. A lot of people have questions these days, so let's go to 2. He says, on your crypto options podcast, you always mention ADV. What is that? Well, you know what? That's on me, Ralph. We're very deep in the options weeds here. We throw around a lot of terminology, a lot of jargon, because we're just used to doing it and have been doing it for a long time. Sometimes we should stop and define our terminology. So I'm glad you're asking me to do that here. This is also why I encourage a lot of our listeners, after you listen to this show, go check out some of our educational content, like Options Bootcamp. It's a very popular show, one of the most popular options shows on the planet. That will help you understand some of these terms we're bandying about here on this show. We don't have a lot of time on this show really for the educational side, which is why I always recommend Options Bootcamp. But that said, ADV, a very simple acronym. It stands for average daily volume. And it is exactly what the name implies. It is the average amount of volume that an option does in a particular day. Like I was just talking about Mara and a bunch of other names. Let's go pull up what we were just talking. Let's go out to BITO. That's a nice straightforward one for an example. BITO right now, the ADV, the average daily volume is 133,000 contracts. I said that's gained 3,000 contracts. So that just means on an average day, any given day, you fire up BITO, you can expect it to do 133,000 contracts. Now, obviously, it's going to do more. Days like today, 304,000. It's going to do less. Other days, it's done 80, 60, 40,000. That's what makes an average. But any given day, you can expect that option's name to put up that number of contracts. That's what ADV stands for. That applies to every option you're going to trade on the planet. I guess another part of his question, he says, when you say Skew is going up, do you mean out of the money puts are going up in price? And if Skew is high, does that similarly mean that out of the money puts are expensive? Thank you. Okay. It's interesting because Skew in the crypto realm is very much the opposite of what we talk about when you listen to some of our other shows like the Option Block or Volatility Views. And remember, when we're talking about Skew, listeners, we're measuring the implied volatility of the 25 delta call and the 25 delta put. If you don't know what any of those terms mean, again, I encourage you, check out our Options Bootcamp show. So usually in the equity world, so your SPYs, your Apples, your NVIDIAs, those 25 delta puts are going to be trading at a higher level of implied volatility than the calls are. So that means there's more juice on that option on the 25 delta put than on the 25 delta call. When we get to crypto, though, things are typically the opposite of that. As I've said many times, there's a lot of hodlers out there, and they're always bidding up crypto. They're long-term bullish. So when you look at the long-term charts for, let's say, a BITO or any option on Bitcoin or ETH or anything else, pretty much any of the major crypto assets out there, they're typically going to have a premium to the calls and a discount to the puts. That means in that exact same scenario, the 25 delta, so the out of the money call in Bitcoin is going to be trading at a higher level of implied volatility than the 25 delta puts. Let's pull up an example. We were just talking about Bitcoin earlier, and we were talking about the skew, the 30-day skew being a positive 2 3/4. That means the 25 delta call, so the out of the money call, is trading at a 2 3/4 point premium from an not net price. It's not trading 2 3/4 more. It's trading at 2 3/4 vol points more than the 25 delta put. So let's say the 25 delta put is trading at a 25 vol. The 25 delta call will be trading at a 27 3/4 vol. So you can expect a little bit more volatility premium on that strike, which is why I've said strategies that aren't necessarily ideal in a broad equity, like selling covered calls or collars where you're buying puts and selling calls against the underlying because you're trading against the skew in an equity, they make a lot more sense in the crypto realm because you're buying puts that are fairly cheap, at least from an implied volatility perspective. You're selling calls that are fairly expensive, at least from an implied volatility perspective. So there are many scenarios, especially last week when things started getting juicy and spicy. There's a lot of vol creeping in. There are many times where you can come in, let's say, buy a BITO and then buy a fairly tight put to protect it and sell a decently far out of the money call to finance that put. And you could probably get that off for even money, maybe even a credit. And so you're giving yourself a lot of room to run on the upside with not much downside to risk it. So those are the setups that are very attractive. That's what makes crypto so attractive to a lot of people. If you just want to do straight covered calls, it's also very attractive in products like BITO and other crypto assets because, again, there's that premium to the upside. So if you're selling calls, you're buying puts, you're doing anything like that, you're taking advantage of the favorable skew setup that exists in crypto versus traditional equity assets where you're kind of doing the opposite. If you're buying puts and selling calls in the S&P, you're paying a lot for that put, you're not getting much for that call, and it's not really, you're kind of playing the worst of both worlds there, where you're getting the best of both worlds in crypto. All right, that was a long answer, but it was kind of a fascinating question. And you sent in two, Ralph. That's all we're going to have time for this week, but I appreciate you sending those in. I hope that helps. Again, if you folks have questions about anything we're talking about here, hit us up at Options on most of the major social media platforms. Questions at theoptionsinsider.com. Also works, of course, if you're on the Pro. You can always send them in via our members hotline as well. You can learn more about that. TheOptionsInsider.com/pro is the place to go to learn more. All right. Lot to cover on the show this week. Hope you had fun joining us this week. Listeners, want to thank our guest, Evgeny Lyandres from VirtuSwap. You want to check them out. It's virtuswap.io to learn more. And of course, the big election spectacular coming up, kicking off in a little over 24 hours right now. So I better start resting my voice. I'm going to be doing a lot of talking. I will be joined by a plethora of special guest listeners. So if you are even remotely intrigued about the election and its impact on the markets, even for a lot of you who are overseas, we're going to have guests beaming in from across the pond as well. So going to have a lot of different perspectives on the show. Should be a good time. We'll keep it right down the middle. No partisan politics, no nonsense, none of that stuff. We run a tight ship here. I won't allow it, listeners. Straight down the middle, facts, what's going on, how it impacts the markets, how it may impact you. Maybe we'll have some jokes, some fun, some trivia in there as well. Maybe some special prizes. Who knows? All sorts of fun. So join us tomorrow. If you follow us at Options, you can see all the info for how that's going to go live, how you can access it. It'll be hitting the on-demand later on as well. Probably break it up. 3+ hours is a lot, so maybe we'll do 1 hour installments. But either way, stay tuned for that. And then, of course, we'll be back with our usual array of content throughout the rest of the week. Hopefully, we'll know what the outcome actually is by the time we turn off the mics tomorrow night. And then we'll be back again next week. My voice probably in rough shape, probably a little bit worse for wear, but right back at it, another episode of the Crypto Rundown. Stay safe out there, everybody.
The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.